There's a lot of talk about this new plan, a lot of things to discuss, but one question has been really what are the effects on the national economy? And specifically, we're being told that we could pay for these tax cuts because of growth. At the same time, we both know you're not going to pay on day one. How far in the red will we go before we turn cash positive on this plan?
David, first of all, thank you very much for having me here, and thanks for the great question. Remember, when we're talking about taxes, everyone is using a 10-year number. So all the numbers that are being talked about, whether they're the deficit or they're the pay-fors, they're being scheduled on a 10-year number. So when we talk about economic growth and we talk about growing GDP, which we believe our tax plan will do, we talk about creating economic growth over a 10-year cycle. If you can grow the GDP by 1%, which we're confident our tax plan can, we can pay down $3 trillion of the deficit by a 1% change in U.S. GDP over a 10-year number. So we're very excited about our tax plan. We think it's very stimulative for the U.S. economy by bringing back American companies to America, having them produce products back in America, and hiring American workers.
So fair enough, Gary, and I know that this is what the president has sought to do, which you are trying to do. You're trying to grow the economy, all things that we all want. At the same time, when you ever have a startup company, you have to invest at the beginning. You go into the red, as you know so well, before you turn cash positive. So when would this turn cash positive for the U.S. government, and how far in the red would we go before we come back to positive?
David, we understand that. We understand the investment cycle. We're acutely attuned to that. And if you look at some of the provisions that we've put into the tax code, we're absolutely encouraging front-end investment. We've allowed companies for the first 5 years in our tax plan to invest and take 100% write-off for any capital investment they make for the first 5 years. That's exactly what we want. We want people to invest capital up front so they can hire people, they can build plants, they can build equipment, they can hire people, and we get paid back over a long term, not just over the 10 years, but well beyond the 10 years. I can't sit here and say, hey, it's day 65, it's day 365, it's year 5. The quicker we get going, the quicker we get the tax plan implemented, the quicker we get a surety of where we are in the economy, the quicker we're going to get the tax plan implemented, and the quicker we're going to get return on our investment. You know that, I know that. That's the way companies look at this. They look at return on capital, and they look at it as quickly as possible.
Totally right, totally right. At the same time, you must agree, I assume, Gary, that this would actually hurt revenues to the U.S. government in the short term. I mean, even under the Reagan tax plan, they lost over $200 billion in revenues over the first 4 years.
David, look, we are putting incentives in place for companies to spend money in the United States, to bring jobs back to the United States, to bring businesses back to the United States, and we're allowing them to expense that up front. Yes, this is going to cost some money in the beginning, but like every company that's ever been built in this country, you invest up front to create greater returns over the long term. We as a country have to make an investment in this country. We have to invest in ourselves. We're creating a tax plan that encourages you to invest in this country and invest in the future of our country.
So let's talk about how you're going to get this done, how you're going to get this through the Congress. One of the things that you're proposing is really curtailing the deductions for state and local taxes in order to pay for some of these tax cuts so we don't go too far into the red. Already we have Mr. Roskin, who is responsible for tax policies in the subcommittee, the House Ways and Means Committee, saying, you know what, we're going to have to make some accommodations for some of the members who come from high tax states. By the way, Mr. Roskin's included in that because his own district takes something like $3.5 billion in deductions. Are you going to have to modify that?
Look, you've seen our blueprint, you've seen our plan. Our plan at this point does not allow for deductions of state and local taxes. We set out to achieve a couple main goals. Number one was lower rates for everyone. Number two was simplification. By creating simplification, we were trying to get rid of all of the loopholes and all of the deductions that mostly wealthy people use. Remember, only 25% of families in America use the itemized deductions. So when he's talking about that deduction, he's talking about 25% of families in America. He's talking about the wealthier 25% of the families that use that deduction. We spend an enormous amount of time talking about that. When you lower the rate but get rid of that deduction, for many American taxpayers, they actually end up in a better place.
Is that a red line for you?
It's not a red line for us. That is not a red line. We've told you where our red lines are. Our red lines is that the business tax rate, both on the pass-through entities and the corporate entities, cannot go higher than it is in our initial proposal, and that there has to be a tax cut for hardworking middle-income Americans. We are willing to work with the tax writers on the other dials that we have in the system.
So, Gary, one of the things you're proposing is simplifying the way we file tax reports. We've heard about the postcard. If it's not postcard, maybe one page. Give us a sense of something.
No, we like postcard.
Okay, postcard. Let's stick with postcard. In order to get that postcard done, you're going to have to eliminate a lot of deductions. Some you've said you will not touch. What are some of the other ones that will be eliminated? For example, deduction for real estate taxes. That's actually a fair amount of money over 5 years as you look at it. It's like something like over $100 billion. Is that going to go away?
Look, we're looking to get rid of the itemized deduction line. There are all different types of unique deductions that have worked their way into the itemized deduction bucket over decades of tax planning. What typically happened, and if you go back and look at the history, and I won't go through the history, I'll spare everyone that pain, is as we tried to modify taxes year after year after year, if we needed a vote here, they needed a vote here, a certain House member or a certain Senate member said, hey, I could use this in my district or my state, and you could get my vote. So we created all these one-off little unique deductions to get the final vote we needed. We need to just get rid of them all. Let's just clean them all out, get rid of them all, get rid of that huge bucket of deductions, and really simplify the tax return where you basically take your income, you take your standard deduction, and you end up and you see your taxable income and you pay your tax based on that. That's really our objective. Simplification, postcard, easy to do. You don't have to go out and hire a tax preparer.
Yeah.
You don't have to go out and buy software. You can sit at your kitchen table and prepare your own tax return.
Gary, how do you define middle class?
Look, we define middle class as sort of the middle 50 to 70%, 50 to 80% of Americans. It's people earning between $60,000 and $160,000. It's not a simple definition in this country. As you know, we have different living standards based on cost of living in all the different states and counties in America, but we've taken a very wide definition of middle class.
So, Gary, final question. We know that roughly 10% of American taxpayers pay about 80% of the taxes. If this plan goes forward just the way you want it to be, will that number go up or go down?
The 10% will stay.
Will the 10% be paying more than 80% of the total taxes or less?
We think that the 10% will be paying about the same amount of the taxes.